What's going on, team? How we doing out there? Who's excited to keep going with Money Mitch? We got a lot to look at, guys. We're going to take a look at the market. We're going to get into a great interview. We got a great interview with Hunter Diamond. Stay tuned, guys. We'll be getting into that. That's going to be coming up next. And then, of course, we're going to get into why I don't know why, but I got a little crazy today. I went short Tesla, guys. Hit the like button. Let's get Money Mitch started. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch. What's going on, team? How we doing out there? I hope you guys are excited as I am for Money Mitch. I've been, missing a little bit, been doing a lot of interviews. I want to get into some stocks, so let's go ahead. Let's dive right in. Then we'll get into our interview coming up next with Diamond Equity Research. Let's go ahead. Let's first dive into the SPY. Let's take a look here. All right, so the SPY turned around heavy today, and it was really at that. We're going to delete all drawings here, guys. I think we need to take a new perspective of what's going on right now in the overall market. And essentially what we're going to try to use is take a look here at the MACD at the bottom. You can see how we really curved on the bottom there. Now we're coming back on up here. The real question is this kind of just a dead cat bounce? Are we going to get back above the 450s? That's where we really turned around today, at around that 450 mark. Now, I want to kind of draw a trend line here, and this is going to be what's determining from us going completely bullish. If we can get back above this level into this area, we're going to call this area the green zone. If we can get back into the 455, that's when we're going to just start going complete bullish and then looking at that. But if we can't get back towards this 450 and we start pulling back all the way down towards, let's say, 430s or 425s, that's when I'm going to be concerned. The real concerning levels for me were when we fought to get below these levels. Then we fought at these wicks. And you can tell here, once we started breaking down, that's when we started getting down these bottoming actions. Do we get back down below that 429, 428 area again? That's what we're going to pay attention to. Today, we did get the turnaround. If you take a look here on the 15 minutes, look how we were just rejecting 1, 2, 3, 4 times trying to get above that 450, and it just could not get there. We'll see what happens tomorrow. Do we retrace closer towards the 430s, or do we start getting back up there towards the 450 and the 450 breakout? Like always, guys, smash the like. Looks like we got some new members in the chat. Alaskan family, new member. Hey, welcome to the chat there. Jim, Hertz, like always, Red Rum, Daryl, John. What's going on, guys? Black Mage is in the house here. What's going on, guys? Mahala, Hala, what's going on, man? Zen Bush, what's going on, man? Yeah, I got a little crazy today, guys. What can I say? I don't know what was going into me, but I said, you know what? I'm seeing consumer cyclicals. They've been up significantly in a week, guys. If you take a look here, look at this weekly candle here that we got in consumer cyclicals. That's why I was looking at some consumer cyclicals to turn back around. And, I was starting to look at the biggest ones. The ones that I was looking at were stocks like Amazon, right? I was looking for that to turn around. I was looking for Tesla to turn around. The real one I should have been short in is Home Depot, man. This thing has been a absolute dog. Look at these dead cat bounces. Bounce, flush down, bounce, flush down. Yeah, Home Depot is not having an easy day holding up here. We'll see what happens here in Home Depot. See if it can hold on this trend line here, or does it keep coming down through the 300? But let's take a look at that Tesla today and essentially what happened here, right? And so what I did was I started taking the trade here early on in the day, and then we got stopped out, right? We were looking for the push up towards 1,000. We got that push on up. Then it broke through that resistance, which was at 106 level. I actually got stopped out here for the first trade. Then I started seeing some topping action up here when we got towards the 140 area. So I started seeing this. This was the third drive. So you got 1, 2, 3. If you guys know about kind of the waves, the emotive waves, when you get these kind of wave on up, these Fibonacci's, usually they come in the threes. And so once we had that third wave on up, I started seeing the top out. And then when I saw this kind of rejection to get above the 1040s, that's when I jumped on it, got in there at the 1035.60 level. It's in the 1035.50s. And then I was using that as the resistance. Didn't want to see it get back above that. And if it did get above that, that would be above this second high that it broke out from. And then we just started seeing the flush down. I was able to take some profit into the close there. Did take majority of it off. Only have 1/5 of the position left. But I'm going to be looking to see if it can continue holding below this like 1,006. I don't really want it to get up there. From this point on, it's just going to be kind of break even on the rest, the last little share. Just try to let it flush down, give me the maximum potential gain there, and I'll take what I can get now. All right, Lowe's also not doing great. So yeah, Lowe's is getting destroyed, guys. I saw that too. Home Depot also, I mean, they're just getting hit hard there. I think this has to do with maybe consumer spending probably coming on down, but that's just normal in the consumer cyclicals. A lot of times you get these kind of waves and things. And right now, it's not looking like a good wave in at least these home improvement stores. That's definitely not the area to be in right now. All right, let's go ahead. Let's take a look here at some other stocks and what did do well today. Of course, basic materials, again, guys, we keep talking about this, right? Basic materials is where we want to be at, guys. Inflationary trade, when we were looking at the beginning of the year, we said, where do we want to be focused on? We want to be focused on the names that are moving the biggest and trending, right? If we take a look at this, from January, yes, we got a little bit of a pullback. You guys, you'll see this little pullback here. But from that point, we came back down. And from February 1st, we've been straight up on materials. That's about 15% here for the sector. But let's take a look here at some of the industries. And you can see it's a takeoff, guys. Look at this January, guys. Look how coal has been moving. It's a little almost upsetting that we haven't captured all this move because we've been talking about coal, but this has been a monster move on up. This is where you want to be trading with the herd, understanding what is trending. If something's out of trend, let them go. Just let it get going, guys, because a lot of times we can find stocks that do trend just like this. And we want to go ahead and can catch these runs. How do we catch these runs? We want to make sure that we're watching the sector to industries and then working backwards to the stocks, not looking at stocks, then trying to catch sectors that are moving. That just doesn't work that way. You got to go from the macro to the micro look. That's how I would like to approach it. All right, so we can take a look here at some of these coal plays today. BTU taking another lift here. Big lift. I had this line drawn here of 23.91, and I should have been watching that today because we went down below that just a tick in the pre-market, and we didn't even go and approach that. Yesterday, we were below that. Once we cleared that 24, look how we started going on up there. We just broke out from that 24, got up there towards 26 today. This is a great stock that loves to hold the VWAP. Look at this 15-minute candle. Nice flag pattern right here, just coming on back there to that VWAP, and then boom, holding that VWAP right here. After you get below it 2 or 3 times to break the VWAP, if it holds that, look for that clear breakout. This is a nice move in BTU. Let's take a look at aluminum AA. Of course, Alcoa having another awesome day here, pushing on up there. Had a huge spike at the open. This is why I like to pay attention to these spikes, guys. We could have been catching these, but look how this is a little bit of a trap. It goes all the way up, all the way down. And so that's why it's important as a day trader to make sure that you know you're out. Because let's say if you didn't get out on this turnaround there at 93.31, you got flushed down all the way to 91. And then the stock came back actually past that level, and it actually goes through that high. And so this is why you got to be careful and understanding bigger time frames sometimes. And this could have helped you is using a bigger time frame. You could have been looking at, let's say, an hourly chart, which is the charts that I really like using, and looking for pullbacks into certain areas. So when you get breakouts like you did here, you got to break out through this level, look for the turn around and come back into that level, and it actually gets towards 93 91.02, and right here was 91.73. Would have gave you an opportunity to get back into this pattern and then riding it up right back on up. How can you measure that move? You can measure this move from $6.16 here on the flag. If we measure from that 91, what do we get from $6 on up? We're going to get past these levels. So we're going to actually zoom back here. I'm going to try to show you guys where this stock could go. And so if we got here at $6.16 from the breakout level, which I always like to do it by drawing the trend line. So we're going to draw the trend line, and you can see how it came back right into that trend line. So you can get that throwback area. And then you're looking for $6 and about 16 cents. So a little bit above 97 is what we're going to look for. So moving to 97 is what I'd call out on a COA. Looking for that move to happen tomorrow into the open. So we'll look how that performs. It's a COA aluminum. Gold is another area that I like today. I did get stopped out in GOLD. Similar move today. What it do? It stopped me out at the gates and then eventually comes back roaring. This is what can happen. I'm okay with getting stopped out, and then this is the important thing is know your levels. You can see how it started getting strong here. We were starting to come on up and then boom, we started breaking on down. I got on out of here at 42, but that saved me some sense, right? Because it could have came down all the way down towards 24.24. Or even down towards 24.18s. Eventually, this stock comes back roaring in the afternoon and actually gets past those highs. And so I'll be watching GOLD tomorrow, but this is why it's always important to know what you're going to take and where your risk is. And understand, if it gets through there, it's okay to cut it and get back into the trade. All right, Mitch, are you calling the bull market or bear market yet? All right, so the real question is, is this the next bull market? That's what I titled this. And so really, the one thing that is pointing towards the upside always is the market breadth. And so yesterday was the first day that the SMA 50, if you take a look at all the stocks that are in the New York Stock Exchange, the NASDAQ, and the AMEX, if you take a look at those, we finally got above the 50%. Today, we're right back down into the 46%, 46.2%. And so the real number that I'm trying to keep a closer eye is above and below the SMA 200, where we're at 30%. I'm trying to see if that can go into the 40%. That's when the new bull market for me will really begin, because I'll be seeing the market breadth push into the move. And so that means what? That a majority of the stocks are pushing the move up, and it's not just a couple of the stocks that are holding the rallies. So right now, the SMA 50 is looking 10 times better than it was, but the SMA 200 and doing what it should do is acting smoother and not showing us that big of an impact. So for right now, I'm not calling the bull market. I'm still holding on here, being careful, taking some day trades, taking some swings, but small short time trades right now, because the longer time frames right now, just these volatility moves can just easily stop you out, either if you're on the long side or the short side. So just be careful out there. Let's go ahead. We're going to go ahead and get into our interview coming on next. Like always, guys, protect yourselves on out there. We don't know exactly what can happen with the catalysts that are going on right now in the market. Of course, more talk of the Feds today in the market. Powell was out, Bullard was out. Pretty much a lot of talk on inflation. Will we get inflation under control? That's really a big part of this market also. I think if you don't see that, then we continue to see how we've been trading the basic materials, continuing to kind of appreciate in value. Steel still going on up today, even after 1 day rest, coming back today. So we'll keep on watch these basic materials. Like always, guys, we're going to keep going here. We're going to get into our interview up next. Like always, do me the favor, guys, smash the like button. Let's go ahead. Let's dive right in. Before we do so, like always, we're going to go ahead and play up this. And you guys do me the favor, smash the thumbs on up.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
That's what I love about you guys. You know, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's go ahead. Let's dive into the interview here with Hunter Diamond, the CEO, Diamond Equity Research. Just going to play a quick disclaimer and we'll dive right in. We'll bring on Hunter. All right, let's go ahead. How we doing? Welcome to the show, Hunter Diamond, the CEO of Diamond Equity Research. Welcome to Money Mitch.
Thank you for having me.
Definitely excited to have you on. Let's first start off with a little bit more about yourself and your journey, Hunter. What led you to starting Diamond Equity Research?
So I was originally involved a lot with small cap companies, and I realized there were inefficiencies with small cap businesses. So we focused more of our research on, companies that are not Amazon, Microsoft, Facebook, that, there are inefficiencies in the market, and investors can kind of, through public research, potentially gain an edge, albeit with, higher risk, but higher reward.
I actually think that plays with us really well. If you don't know our CEO's founder story here at Benzinga, he was doing the same. He was covering small cap stocks for the street and kind of working with that. And that's what brought him to creating Benzinga. We really want to uncover kind of the information for the retail trader, especially on small caps that a lot of times go undervalued and underappreciated, and a lot of times can't get into giving us the story, right? And I'm all about the story here on Money Mitch. So let's go ahead. Let's dive into what kind of research Diamond Equity Research does. What could we look out for?
Sure. So, the companies we cover vary. We work with blockchain businesses, food service companies. Like, for instance, one of our clients, research clients, Blue Star Foods, right? And they do RAS-based farming. So if you're not familiar with, Netflix, Seaspiracy, and sort of what's going on with fishing, it's a horrible system right now. Basically, there are enormous sea cages in the ocean. There's pollution. There's, waste from the fishes, and it's very disgusting. So what they're doing is they're moving to a land-based method where they're using purification systems, and they build these big land-based facilities where they can, move the fish closer to basically the supermarkets or the end consumers. And they're a company that, has huge, upside basically in, albeit with risk, but one that we think is very attractive. And the other one in the space, there's one or two of these companies that are public. Aqua Bounty, it would be the second one. So
that sounds really interesting. I mean, it's all about uncovering the stories, right? And I think that's an amazing thing that you guys are able to bring those stories to light. Let's get into here. I did see recently that you guys had a quarterly emerging growth invitational investors conference. Tell me about that. And how could maybe the public take part of the next time that you guys have your quarterly meeting?
Absolutely. So it's like your show, right? So we try to find ones in a variety of industries. We try not to have too many, crypto companies or cannabis, and give people a different assortment because everyone has a different, affinity for investment. So the companies, there were telecom companies, blockchain, one that's doing diagnostics for pets, for cancer in pets. And these companies are all, they're a good, high level. When you're thinking of a portfolio, right? These would be in the higher risk basket, obviously. But, there's sort of an affinity. You don't want to, most people, myself included, don't really want to just have, maybe bonds and the large caps, right? So these ones, there's a lot of opportunity if you can dig deep into the story and ask them tough questions. And we encourage that at our events. We say, look, you should really, like almost Shark Tank, give them, the tough questions about really, is this going to work? And how's the revenue or EBITDA scaling, or how's the, what are the competitors doing? And we think they're great points, because most of these companies, you don't really hear from them, or, they maybe do an earnings call, but, other than going on our show and, they're sort of working in their offices or home. And so it's a great way for people to hear. And it's always much different, as you read a report or you hear, read one of our research reports versus hearing, me speak or an executive speak. It has a much different feel to it, right? Or going to physical events. So
definitely, I'd have to agree. I mean, that's what we love about why we do on YouTube. I mean, we could go to, OTT right now, but then the retail investors, they wouldn't be able to drop in comments like they're doing right now, and wouldn't be able to speak directly to the companies. And I think this is the important part also, right, is giving the ability to get to the companies. And I think that you guys are doing a great job with it. Let's look into actually getting into the small caps and what you guys look into. So how should investors look at small capitalization equities? How do you think the investors should approach it?
They're high risk, right? So, they're a part of your bucket. If you think about, your own portfolio, you think, how much risk can I take, right? And then you decide, let's say you want 10% in higher risk companies. Now, it's very difficult to get involved with VC funds unless you're accredited or a pension, or, you can't really join these major VC funds. So the public small cap market, I kind of view as venture capital. Right? They're, maybe a little further along, depending on the company. Maybe if it's, 100 million revenue, it's not what you would say is VC, but they're, somewhere between a startup and, like a mid-sized business. And so venture capital like. And so I think, you pick a couple. What I do is I pick a bunch of them in different sectors, right? So let's say, for instance, the one I talked about, Blue Star Foods, I wouldn't pick then Aqua Bounty or another public company in the same sector. I would maybe then pick a blockchain company, or I would pick, a biotech company, or I'd pick a shipping company. And I would make sure that I'm monitoring each one, making sure they have cash, talking to the CEO if possible. And to me, when you have it diversified and you're really researching it and you're reading the numbers, you're somewhat de-risking it, a little bit. You have a portfolio approach. And then you also I'm not knocking, the large caps. Those also, take, most of the capital in the country, right? Just goes to Amazon and these, large cap stocks. But I think it's something where, there still is potentially an edge if you can really research these companies where, to me, there's not really much I can know about large caps that everyone, other analysts doesn't already know, right? So.
Definitely, I agree with you. One of the things is you have to put in the work when it comes into small caps. It's not just as simple as pull up, let's say, a finance or any stock chart and just have all the information there. Usually, big caps will have so much coverage, but these small caps, sometimes you haven't seen them put out anything in months at a time. So you have to actually do your due diligence. Let's get into picking the kind of the winning businesses out of the small caps. How do we go ahead and take a look at that? What should we look for to find some winning businesses?
Yeah, it's challenging, right? No matter what you do, there's ups and downs and winners and losers. That's why I almost say it's like VC. The things I personally look for, first, does the company have the capital to kind of function over a reasonable interim, right? Do they have capital? Do they have cash? Do they have manageable debt, right? Do they have friendly debt? Not too much, maybe convertible debt or things that are going to, dilute the company and just you're going to, have a lot of shares issued. So those are the first ones. Then I look at, the market, right? Is it a good market? Who are the players in the market? How competitive is it? Is it really dominated? Is it a market where the barriers to entry, the company can enter the market? And then the biggest thing I would say, to kind of, I guess, go against that point a little bit, but I look at the actual execution, right? Because any micro cap or small cap, for the most part, they'll have a slide that says our market size is, 50, 100 billion. Now that is, like I said, a good point. You don't want to really, or I wouldn't pick companies that have, a 20 million addressable market, right? You still want the big market, but I look at, okay, how is the company executed? If it's a biotech, have they really taken it to trials? What's the data showing? If it's a revenue generating company, are they growing revenue already? Are they able to close sales? Are they just talking, about market size, but there's no execution? So I try to find metrics that show they're already executing, which kind of de-risks it. if that makes sense.
No, it completely does. We do the same thing. I used to run a show of SPACs Attack, and so what we did is look at the TAMP, right? Look at the expectations and how are they meeting those expectations, right? One of the things that we were doing in the SPACs is that a lot of this was forward guidance, right? And so we want to see how the earnings are kind of meeting those guidance along the line, and I think that's the important thing always is everyone can give a growth story, but can you go ahead and meet those expectations? And if you're able to hit them, then we can keep following the company's story and watch how the financials kind of progress. Now, you just kind of mentioned some of the financials that you kind of take a look at. Is there any specific kind of ratio that we should kind of keep in mind when we're taking a look at anything that stands out to you when you're looking at financials? Maybe it's book value or PE ratios. What do you like?
Yeah, it completely depends on the industry. But I would say for small caps, it's a little different because they are not these, big conglomerates like Apple, right? Where you can just put a PE or EV to revenue. I really look at, revenue growth. Are they able to grow the sales? Because for most businesses, if you can, that's the most important at that stage. It's like, are you deploying capital and are you experiencing hyper growth? So I would look at sales. If it's biotech, which we cover a lot of biotech and a lot of small caps are, biotech or life science, it's looking at, are they advancing the trials? What's the data showing? When are the readouts from the different safety or efficacy data? Those would be, sort of the main ones. But you can look at various, you can break it down even further and try to look at operational metrics. Like for instance, the fishing one, just going back to that one, you can really look at output, right? You can say, okay, how many salmon are they selling? How many, crab? And then kind of, make sure that they're showing this hyper growth. And to me, if you're a small company and you're not experiencing hyper growth, something's wrong, right? Because we're living in a world where there's, companies with trillion in market cap. So if you're not growing when you're like 50, 100 million, there's a major issue, right? That needs to be fixed. So.
Definitely. I think that's one thing that you could definitely point out. We want to see that growth coming and continuing to show up in the revenue. Let's go ahead. Let's talk about, is there any other stories you'd like to bring on up? Any other thing that maybe we haven't heard about that we can take a look at?
Sure. So we're very active in cryptocurrency and blockchain. So one of the things that, people have various ways to get exposure to it. Obviously, they can go on Coinbase or Gemini or these exchanges and just buy Bitcoin or the different assets. The thing I kind of like is we cover two DeFi Technologies and Equinix Limited. And so these are kind of more pick and shovel plays, meaning they have exchanges or they have ETPs, that exchange trade products that give investors exposure to the assets. And so their business is more based on, generating, AUM they both have an AUM asset management business. And versus this continuous, trading of currencies or betting that necessarily crypto is going to go up, they can kind of manage to make money if it just sort of exists or exists in some capacity through their segments. So it's kind of some of these businesses are kind of a lower risk, somewhat lower risk. It's still, cryptocurrency, blockchain, but a little lower risk and a different way to play it versus just, okay, let me buy half a Bitcoin or something and wait. So.
Yeah, it's a good way of trying to diversify also in those investments, right? I think that a lot of young investors are looking for ways to get into cryptocurrency. And that's not always, like you said, it's not always just going and grabbing a Bitcoin. There's definitely some other opportunities out there. So appreciate you coming on and joining us here on Money Mitch. Hunter Diamond, the CEO of Diamond Equity Research. How can others kind of reach out if they want to kind of learn or get some more research from you guys?
Sure. So we have a website, diamondequityresearch.com. And then we also have a diamondconferences.com as our conference website. We host them quarterly. We'll have another one in the summer where we have, between 10 and 15 public companies, kind of like this. I try to do what you're doing, maybe not as well, but in some capacity. And we host them, we ask them tough questions, and investors can kind of query them. And then on our site, we have a bunch of companies, public companies that we cover. There's research initiations, there's update notes. Investors can kind of drill in, and there's a contact page too if investors want to learn more about the companies.
Perfect. If you guys want to take a look at that website, it is located down in the description below. All you got to do is just click on it. So appreciate you joining us today, and we'll bring you back. Thank you for joining us, Hunter.
Absolutely. Thanks for having me.
Appreciate it. All right, guys, there you guys have it. Another great interview. What I really liked is that was on small caps. When do you hear about small caps being mentioned? Give me a thumbs up if you guys enjoyed me covering some small cap coverage today. Like always, guys, we're going to keep going here on Money Mitch and keep building. I've been enjoying today and enjoying this week. We've had some great interviews. We had Super League Gaming, Desktop Metals yesterday. Today, getting into a research equity, small caps, talking about some trades, looking at the trades that I make, seeing what's hot, what's not. I've been enjoying this show. I hope that you guys are. And please, give me the feedback. If you guys want to see something more or less of on Money Mitch, I'll go ahead and do so. You guys run the show. I just try to make it fun. Let's go ahead. Let's have a good time, guys. Hit the thumbs on up, and I'll see you next time on Money Mitch. Catch me tomorrow on live trading with Benzinga. I'm sure we'll have a great action day. Zunaid, Ryan would be joining me, and we'll go ahead and try to kill it another day. We'll see how my little bit of shares is hanging out there in Tesla. And hey, what can I say? Sometimes I'm a little crazy, and I like to go short. Oh well. We'll see you next time right here on Money Mitch.